Welcome back to CMC Markets Trend Tracker series. Today I'll be analysing what has been top of mind for our clients, in particular gold, as well as a few currency pairs, the Aussie and the Kiwi. So let's get straight into the charts. We'll start with gold first. There are two competing factors at play here in gold. First is the risk on rally we have seen in the US equity market over recent weeks and, of course, throughout 2024. Now, we are entering the second quarter US earnings season, so investors and traders' minds may be on US individual stocks, and that in turn may take the shine off gold. And secondly is the recent benign US economic data. Last Friday, we saw US non-farm payrolls data slightly lower than expected, and that has reignited talks about a possible Federal Reserve rate cut at its September meeting. In fact, expectations are for around a 70% probability that the Fed will cut rates by 0.25%. And with that in mind, if that were to happen, could likely impact US dollar negatively, which in turn could see the gold price rise. So keep in mind those two factors when trading gold over the next few days and weeks ahead. Now, the technical picture, it's a little bit different. The technical picture shows a sideways trend. You can see there in yellow the 20 EMA above the blue 50 EMA. Prices have generally stabilized above a 2,275 horizontal support line since the 1st of April. And they've traded within a 2,275 to 2,050 range. You can see there on the 20th May, we made a record high of 2,450 approximately. So they're your key levels to keep in mind when looking at gold over the next few trading sessions. Next is the Aussie dollar chart. Now, as you can see there on the daily chart, the Aussie has pushed higher most recently, and that is due to slightly stronger data in Australia and softer data in the United States. And by that I mean, in Australia, we've had the stronger inflation report a few weeks ago, where the monthly CPI data increased from 3.6% to 4%, and thereby igniting some talk that the RBA might look at raising interest rates at its August meeting. And last week, to add to that, retail sales printed at the high end of expectations. On the flip side, you've got the US dollar slightly softer with the non-farm payrolls report that we saw on Friday night, and that has led to market analysts increasing their expectations of a Federal Reserve rate cut at its September meeting. So those two together has seen a push higher in the Aussie. I think what is key going forward for traders is economic data. So in the United States, you've got US CPI this week, and that'll be key to see whether the market is on the right track in terms of looking for a rate cut in the States. In Australia, though, we're pretty light in terms of data. Need to wait until July the 18th for the employment report, and then July the 31st, the big one, the quarterly CPI data. And at that point, I would believe that the RBA has more information and it can make up its mind whether they might increase rates or not in their August meeting. With that backdrop in mind, you can see on the chart, the Aussie's been pushing higher versus the US dollar. We've made a very significant break of that horizontal resistance line at 67 cents. The Aussie has been hemmed in between a range of 65.50 and 67 cents since March this year. So quite a significant break we have seen over the last few days. Whether that is sustainable or not will just depend on next few trading sessions and data, as I mentioned. The stochastics oscillator down below has pushed above the 80 level, which means there's some decent momentum behind this recent push higher in the Aussie versus US. So from here, levels to keep in mind are 67 cents as support, 66.80 is your 20-day EMA in yellow, and top side, going back to 68.70, around there, that was the swing high point in December last year. And finally, we have the Kiwi dollar chart. Now, markets focus is firmly on the RBNZ interest rate statement and meeting this Wednesday. Consensus and market expectations are for no change in the Kiwi cash rate at 5.5%. However, the RBNZ has been known to surprise in the past. but their focus firmly remains on inflation. It's probably likely the RBNZ would prefer to wait for more data, the second quarter data coming up, July the 16th, New Zealand CPI, and then 6th of August, New Zealand jobs data. And they'll have that data then for the next meeting on August the 14th. So with that in mind, let's take a look at the technical picture. Technically, the Kiwi has been trading in a sideways range. The range is there, 60.50 to 62.15. You can see how prices have bounced off that 60.50 horizontal support numerous times since May. And equally, there's a double top there around 62.15. So for traders looking at the Kiwi US dollar currency pair, those are the key levels to keep in mind over the next few trading sessions. That concludes my analysis for today. Thanks for watching, and I'll see you in the next video.